Traders, we're back once again, as we do every single week, with yet another very nice strategy, very nice free strategy, of course, which takes place only on the 5-minute time frame, and it uses the concept of liquidity and the concept of fair value gaps at the very same time, and it can give you very nice and profitable trades. If you're a beginner, do not worry, I'm explaining every single thing step by step on every single video, so this is the right place for you to become profitable and learn from me. Let's go ahead now and begin with this very nice video. So here, right off the bat, as you know, I like putting, let's say, an overview of the logic that is gonna follow. This is not gonna be the exact example that we're gonna be using, but this is the overall logic that we are gonna be following, and we're gonna go through the rules step by step. So let's go ahead and proceed with the next slide now. This, guys, is gonna be our buy model that I have drawn right here, and the sell model is this one right here that you see on the right. You see instantly, when you just take a look at the drawing, that supposedly here on the buy model we had a move beforehand, and we identify some form of liquidity, and you see the very same thing with the sell model as well. But I'm gonna show you real examples, one for the buy model and one for the sell model as well. Let's go ahead and check out our conditions, our rules that we're gonna be looking at in order to enter a trade. But right off the bat, I will tell you that things of value in life certainly come with a certain price, and of course I'm referring to my exceptional services, which I'm using and I'm proving every single day to my clients live that I am making profits with them, not only in the trading signals, but mainly with the strategy that I'm using in the one-on-one mentoring, guys. And it is important that we will dedicate some 30 seconds to 1 minute to this specific strategy, this spectacular strategy. I'm gonna talk about the success rate of this strategy, which is absolutely enormous. I'm also posting videos of me taking trades with this strategy, and I'm doing so in the signals group. I'm posting some videos of me taking trades with this strategy just to also incentivize people to enter the one-on-one mentoring, which is spectacular. You will not learn the same bullshit that every single person out there is teaching you, and then you go ahead and you apply it in the markets and you see that it is not working at all, or it is working like 50% of the times, and then you wait for your confirmations and all of that bullshit, and price gives you the small reactions and then stops you out, and then does the same, and price gives you the reaction, stops you out, or sometimes price is gonna give you something like that again, or the other stupid stuff that you are waiting for, it's gonna come until here and leave. So not only you are losing a bunch of trades, the trades that are gonna go, most of the times you are not getting activated, let's be honest. I hold the solution to all of these problems with the one-on-one mentoring, but of course the king and the queen strategy that we are using in the signals are spectacular, and they are also giving a very nice winning percentage, of course. So just go ahead before you continue with this video and join those exceptional services. So let's go ahead and continue. Number one of the rules, price must be moving either in a trend or there is a clear change of character. And you will see with the second example, the bearish example, what I'm referring to when I'm talking about this clear change of character. Number two of our bullet points, our conditions, you must identify some form of liquidity being created. Very important. Number three, there must be a 5-minute FVG below the liquidity point. And number four, the 5-minute FVG has to be below the 38.2% Fibonacci level, and of course later on I'm gonna show you a slide where you can copy my Fibonacci settings. Let's proceed with example number one, which is our bullish example. This is the outlook. So pay very close attention. Okay, you can go ahead and read what I'm saying here in the right, but when I'm doing the presentation, I'm teaching you further things, so do not skip anything. This is the outlook of the first example. Is this one a valid low of the 5 minute? Yes, it is. Why? Because guys, this point right here is lower than the low to its right and lower than the low to its left. So this was one of your legs until here, and this one is your second leg until here. Leg number 1, leg number 2. Okay, remember that this is our outlook over here. So now I will take this movement step by step. It is the very same thing. Okay, here is your low, here is the first leg, the retracement, and the second leg exactly right here. What we will be doing, what we will not be doing, actually, we will not be trading every single leg. Okay, this is an example right now, as I'm also saying, of what we will not be trading. Let me proceed one step further. And I'm referring, of course, to this fair value gap area, which is created from the high of this first candlestick and the low of this third candlestick right here. We will not be placing a trade over here. Okay, you have a clear fair value gap here, and price of course gives you the perfect reaction so that you will go ahead and buy it exactly right here. Traders with fear of missing out would all be buying here with a stop loss either below this area or below this one. Do not do that. What did I say as another rule? You have to identify some form of liquidity. And we said, how can we identify some liquidity? We need to have two legs. Okay, one leg, second leg. We are not trading this FVG. We identify our liquidity point, which is the low before the creation of the second leg. We extend that towards the right. This is our liquidity. Let's proceed. What else do? We grab our Fibonacci tool. Now that we have identified our liquidity point, which is right here, and we know that people are entering here from fear of missing out, they're buying, we identify the fact that there are a bunch of stop losses below this area, and this is a very bad dollar sign. There are a bunch of stop losses below this area. So once we have identified those conditions, we go ahead and we grab the Fibonacci tool, place it from the bottom of leg number 1, leg number 1 is this one, okay, until the top of leg number 2, okay, from the bottom of number 1 until the top of leg number 2. And here we go, guys, beginning of first leg and top of second leg, okay, and the liquidity. I have placed everything on the very same slide so that you can go ahead and see everything taking place together. This is the best way for you to learn. And please do not go ahead and leave silly comments. There are some silly comments like, why are you not giving the things that you are teaching in your academy or in the signals or in the premium for free? Because when did you get something of very high value or just of value for free in this life? Did you go to your doctor and he said, take it for free, my service? Did you go, let's say, to a private school and they said, okay, for you it is for free because we have made enough? Or did you go to the grocery store and they say, yes, this is for free? So, of course, you are not taking what I struggled for free. It is, you are free. What you are free to do is not to join the services. This is your freedom. You are free to say, for example, I like Chris as a teacher, and he's the real deal because I am the real deal, and go ahead and enter. Or you can say, this is your freedom in this free world. I don't like Chris. He is like all of the others, and I'm not gonna join his services. It is absolutely fine by me. I don't have any problem with that. Those of you who enter, of course, they grasp everything and they are successful traders, especially those who put in the hard work. If you want to learn the same stuff again and again and again with different teachers, then go ahead and join one of the other teachers. What I'm teaching is way different in my mentoring stuff that nobody out there has ever taught you. This is a guarantee. Okay, let's proceed. So all we need to do now is identify any fair value gap. I'm saying of the 5-minute time frame. Of course, everything takes place on the 5-minute time frame. below the 38.2% Fibonacci level. Let's see. Let's proceed. Here are my Fibonacci levels, by the way. For those of you who want to copy those Fibonacci levels, just pause the video and go ahead and include those Fibonacci levels right here, and you will be having exactly what you see on those PowerPoint slides. I will proceed. Do we have FVGs below the 38.2 Fibonacci level? Here, I deleted the Fibonacci level so that you will not be confused. So again, this was the 38.2. It falls upon this week. This plays a major role because we need to have at least a 2-to-1 in order to take the trades. Okay, I should have included that as a rule, and I am referring to a 2-to-1 until the highest liquidity, the top of leg number 2. So we have one fair value gap that falls below the 38.2, because if you recall, the 38.2% was exactly right here. We have one FVG and we have a second FVG right here. Now, let's proceed one step further. Where is gonna be our entry, our stop loss, and our take profit? All we need to wait for is a reaction from the fair value gap, and I'm referring to this candlestick, of course, this pin bar kind of candlestick. I don't care about the names of candlesticks and stuff like that. And when you see your first bullish candlestick after the reaction from the FVG, you are entering. Very nice. But where are you placing your stop loss? Your stop loss, since we reacted from this first fair value gap, we are gonna take the trade here. If it would penetrate, this is an answer to one of the questions that you are gonna ask. So before you ask the question, if this gets violated and this gets respected, then you wait for another bullish candlestick here, whatever it is, and you enter again down here on the second FVG. Now, if there are multiple FVGs, what you're doing, join the premium for that stuff. I'm not going to tell you here. So where is the stop loss going? Below candlestick number 2 out of the 3 that created the fair value gap. So candlestick number 1, candlestick number 2, and candlestick number 3, this one, out of the 3 that created the FVG, below candlestick number 2 goes your stop loss. And the take profit, of course, on the top of leg number 2. This is your beautiful take profit, and it needs to be at least a 2-to-1 reward to risk. So hopefully that was very clear until here, because now we will proceed to the second example, which is going to be a bearish example. Okay, of course, I have a final slide for this bullish example where I'm showing you that the trade played out in this occasion. As you see right here, beautiful trade, and it went even further towards the upside, but we would have closed everything exactly right here as per rules of this strategy. So now we will proceed to example number 2, a bearish example. The outlook again after a change of character. So this example right here comes exactly after this example. So this kind of continued and then broke down, and we had a change of character towards the downside somewhere here in the past, and a very strong one with impulsive candlesticks. So what do we see? We have a high because it is higher than the high to its right and higher than the high to its left. This is the first leg, okay? Retracement, second leg, right here. Just an overview. So here on this second leg, so we have leg number 1 and leg number 2 and the retracement. Most fear of missing out traders would be entering from these fair value gaps of the 5-minute time frame that you see right here. We have 2 of them, 2 such fair value gaps. They would be entering short. We will not be doing that. Instead, we will be going ahead and we will be identifying some form of liquidity. Is there some liquidity? Yes. It is the retracement of leg number 1 before we created leg number 2. This right here is your liquidity. So we have some liquidity being created. Let's move one step forward. What did we say that we are doing? We are taking our Fibonacci tool and we place it on top of leg number 1 until the bottom now of leg number 2. There you go. And with these two small blue circles, I am identifying the top and the bottom of the leg. The legs, top of the first leg and bottom of the second leg. And feel free to pause the video for as long as you want if you're struggling, or go back and forth in order to understand those concepts, because they are very important. They will help you also in the rest of your trading, not only in order to apply this strategy. So, what did we say? Here it is a little bit clearer because I have left the Fibonacci levels on top. We need to identify any fair value gaps or all of the fair value gaps from the first leg. This is your first leg, which means above the liquidity, and it must fall above the 38.2% Fibonacci level as well. So taking the Fibonacci level from the top until the bottom of those two legs, the FVGs should be above the 38.2% Fib level. Of course, most of the times this is going to be the case. There's no question about that. Let's proceed. What kind of fair value gaps do we have above the 38.2 Fib level, which was the 38.2% Fib level was around here? We have this 5-minute fair value gap, and we have another 5-minute fair value gap over here. All right now. Another thing, what did I say? From whichever one we see a reaction first, and I mean even the penetration with a wick is a reaction. Okay, if a body would be closing above it, then we disregard it, and we are looking for the second one in this occasion. When we see a reaction, if this would be a bearish candlestick, we would be entering instantly. Now that we saw a reaction, all that we're waiting for is for a bearish candlestick in this occasion to be created. Okay, this is the bearish candlestick that we are looking at right now. Of course, as I said, this could have happened with the very same candlestick as we saw with the bullish example. So this could have also been a bearish candlestick instantly, and we would have entered instantly. But this reacted, and the second one is an inside bar, let's call it whatever. So we enter exactly right there, guys. Nice. The entry goes over here. This is a bearish candlestick, of course, so its bottom, its close, let's say, is right here. We enter instantly. And on futures that I'm doing, the best decision of my life that I left CFDs for futures, of course, and I can see the results of that. There's no question about it. I'm an expert, an absolute expert on NASDAQ areas that I'm highlighting. They are being respected to the tick, and those are areas that I know about only because I hold the secret to a single trick that is happening. You might know about the areas, but you don't know which one is going to get respected. Only the members of the one-on-one know this specific secret. Okay, so what is the entry again? It is exactly right here. The stop loss goes above candlestick number 2 out of the 3 that create the FVG. So for this FVG, 1, 2, 3 candlesticks created this FVG over here, which was tested until here. So this was the remaining part. And now the stop loss, of course, still goes above candlestick number 2 out of the 3 that created this FVG. Initially, the FVG goes until here, by the way. Okay, let's proceed. This is exactly how the trade would be playing out. Simple, easy. Okay, trading is easy once you realize how to trade and which areas to trade. Okay, most of you are struggling, guys, because they're teaching you to go from the daily to the 4-hour to the 1 hour to the 15-minute and identify bias and daily bias and bullshit like that. It is all okay. Before you judge, it is not exactly everything absolute bullshit, but even if you realize what the bias is, let's assume that you are like stuck with getting the daily bias correct. Even if you get it correct every single time, which you will not, then I will tell you how are you gonna be entering? With the things that they are teaching you, you will not be able to enter consistently and win consistently. What I'm teaching you though, even when your daily bias is wrong, I'm only using 2 time frames, by the way. In the worst case scenario, I will go to a 3rd time frame, let's say on a single day when I don't see what I want to see on 1 time frame actually, 1 time frame and 1 for entry, because I can teach you how to see everything from this 1 time frame. So you go from X time frame to the 1 minute for your entries. This is what you're doing. Okay, so rarely I will go to another time frame such as the daily to check out for something. And again, you will see, even if you join the signals where I'm not teaching the mentoring strategy, of course, okay, not even close. I'm doing the king and the queen strategy on the signals, still spectacular, and I have proven that you're getting payouts. I'm getting payouts only by following king and queen 90% and 10% my personal strategy, but my personal one has given me until now above 95% the way I'm applying this strategy. Okay, the way I'm applying it, this is what I wanted to say. So go ahead and join my spectacular services. Stop wasting your time going around and searching for fake mentors. Okay, they are fake. 99.999999% they are fake. Do not fall for their traps. Come to me, I am the real deal, absolutely, because I'm doing everything live. Okay, not only I'm doing everything live, I'm not just going ahead, getting a payout and blowing the accounts. I am keeping my accounts and I am proving it live. Okay, contrary to all of those other traders. So go ahead and join me. Do not waste any more time, guys. Furthermore, subscribe to this YouTube channel and leave me a like, share it with all of your trading friends, family, everyone. Somebody might be the next, let's say, prodigy. Someone might be the next huge trader, so you don't want to deprive him or her from the benefit of becoming one. Subscribe to this channel. And this is gonna do it for today, traders. And thank you all for watching. Until next time.